maybe you can find a stupid investor that owns an apartment. But typically, if you've gotten to that scale, you know that you go to a broker to put it out there and get the best pricing. We're not stupid homeowners that don't know how to read, that get scared, and we get tricked into somebody coming into our kitchen and basically swindling us to selling our property for 40 cents on the dollar.
So, hey guys, I'm Julian Castle, a partner in the Real Estate Investors Group, and today I have Lane. Lane is at Simple Passive Cashflow, and he's going to be talking about how he started his fund and the whole journey he has currently. And so, Lane, how are you today?
Hey, good. Thanks for having me, Julian. Aloha, everybody.
Aloha. Yeah, Lane is from Hawaii, guys. So he's bringing the Hawaiian vibes here. So Lane, tell me, in terms of currently right now, as your success stands, like what is like what, currently, like where are you at? Like,
Yeah, I mean, so today we syndicate large apartment buildings and we also develop. That's kind of where we're heading off more in the future. And then we also put together preferred equity, which are essentially debt funds
hmm
for investors. The current stats are, $2.1 billion of assets, about 100,000 or 10,000 rental units. But yeah, I mean, those are just kind of vanity metrics. I think kind of why I wanted to come on your guys' platform is, yeah, you kind of help out the audience. I didn't always start there, right? Like, I kind of started just as a passive investor and working my engineering job and, kind of got started from there.
exactly. So which brings me to the frame of the conversation. So we're going to be teaching to the problem. So the problem is I'm not at a billion in assets under management, or two to say for to say. So in terms of how much time did it take you to get to where you are?
Well, I mean, I would say the first like 5, 10 years were the slowest, right? I mean, that's how investing works. I mean, that's how anything works in terms of, exponential growth. It's slow in the beginning. Um, I started back in 2009. I bought a house and I rented it out, and you know, I just saved up my money, but back then, I was making, six figures as an engineer, more importantly, saving like $50,000 a year to buy more rentals.
Mhm.
So around 2012, I started to buy a lot of those turnkey rental properties out of state.
Mhm.
But I think, people are kind of reading between the lines. Like I never started with wholesaling or flipping. I always had money, right? I mean, it wasn't that much, but I kind of started on this, like, I'm writing a new book, The Wealth Elevator, and the whole
Mhm.
premise is like there's different floors to this ascent to the top, right?
Mhm.
And I think a lot of people, they may start in the basement. It sounds horrible, right? Well, it kind of is. Right?
It-
Like if
it's
you got no money,
yeah.
bro, you can't invest in real estate, like
Yeah.
you're just doing more active stuff. And I was fortunate enough to go through a silly thing called college and, be duped into an engineering job, but it allowed me the capital to start on the first floor. So for the first, I would say from 2009 to 2015-ish, I
Mhm.
was just buying like little rental properties and I was doing a lot
Mhm.
of the turnkey rental stuff. Like I was living in Seattle at the time for a bit and
Yeah.
then buying properties in Birmingham, Atlanta, Indianapolis. You know, just kind of building up that capital base, right? Because a lot of this is very capital intensive. Um, just slowly increasing my net worth to, just about accredited investor status.
Yeah. So, and why did you start this? What was the main motivation? You had an engineering job, you were making good money. Why did you start real estate investing, and why did you end up here? So,
Yeah, I mean, I think like the engineers, like they make okay money, but it's nothing like doctor money or dentist money for sure.
yeah.
I mean, you'll never really be able to comfortably afford like a nicer car, like a Lexus, or I guess you could, and you can use a credit card to buy anything, I guess. But
Yeah.
like that's just not the lifestyle of an engineer who makes 150, $200,000 later on in their career. So there's that pain point, right? And then plus, like I started off as an engineer in construction management, traveling a lot for work, and I worked for kind of a difficult Fortune 50, Fortune 500 company, and it sucked.
Yeah.
right? And for those people who are kind of in jobs that suck, the good thing maybe get paid pretty well by it. So, if you can parlay that income and
Yeah.
save more of it, whether it's, most of our investors are able to save maybe 50, $100,000 a year from their day job because they make multiple six figures. But if you can save 5, 10 grand a year, now you're buying a rental property every year or two, or maybe three at first, but it exponentially gets quicker and quicker for you to do that.
Yeah.
Um, but yeah, I mean, to answer your question, I think my job just sucked. Like there was enough pain there for me to be like, all right, I really don't want to do this for 40, 50 years and invest in this 401k nonsense, that the masses do.
Yeah.
And then when I bought that first rental property, it was kind of by accident. Like I knew nothing about the rent to value ratio,
Hmm.
or where to buy. But I was like, wow, like this is kind of cool, right? Like it was a lot of beer money at the time. I think it was like maybe $400 every month.
Yeah.
And then you're making, and I'm sure you guys talk about this a gazillion times, tax benefits, mortgage pay down, appreciation.
Yeah.
The tax benefits are better with syndications, but even at the time, I was like, wow, if I just did this a handful of more times, I'll be able to quit escape the rat race and fire my boss. And, there was a path forward, right?
Mm.
And for people listening, like it works. It just takes a while to do it.
Yeah. Yeah. That's great. How do you feel now where you're at?
Well, I'm a little bit different, right? Like, somewhere along the path around 2015, 16, I went down kind of the general partner syndication operator path. So I traded one job for another. Granted, I am my own boss and, I'm kind of working for myself and, motivation wise, it's a different game, but I
Yeah.
just traded one rat race for the new rat race, you know.
Yeah.
But for the passive investors that we kind of work with, right? Like if you can play the game to get up to a certain amount of net worth and then invest passively, it's not a bad gig.
Yeah. Yeah, totally, because they get passive returns, and that could mean being able to stay at home or raise the kids, for example.
Right, right. Especially like maybe you're doing real estate professional status. Maybe it might make more sense to stay at home or one of you guys to stay at home. Yeah.
Yeah, that's great. So, how much did it cost to get to where you are in terms of, I guess startup costs or any general cost along the way?
Well, I mean, like I said, like for the first I'd say at least 5 years, the name of the game was just saving money for 20% down payment.
Hmm.
Um, and taking advantage of the 10 Fannie Mae Freddie Mac loans at your own personal name and maybe 10 of your spouses. Like that was kind of my path that I
Hmm.
took. Um, I think what I kind of discovered as I started to interact with more higher net worth passive accredited investors is, once your net worth goes over half a million for sure, like, or you make multiple six figures as an accredited investor, little rental properties are sure a pain in the butt and, they just aren't scalable. Like
Yeah,
when I had 11 rentals, I had professional property management doing my bidding for me, but
yeah,
managing the manager was quite the ordeal. Well, I guess it wasn't that bad, but with 11 rentals, I had maybe an eviction or two a year, or some kind of big catastrophe that happened every quarter. That all for what, $3,000 of passive income a month. I mean, not too shabby, right? I
yeah,
mean, I thought that was super stoked about that back in the day in my 20s, but
yeah,
most American families need 10, $15,000 of passive income. So you got to multiply that exception rate by 3 or 4. And now you're talking about an eviction every other month, some kind of big catastrophe that happens every couple of weeks. And now you can see where it becomes a job. And by the way, you're also on the front lines for legal litigation too.
yeah, yeah. That's tough. So in terms of how much cheaper could you have done it now, knowing what you know? You'd say it stayed the same, or
Yeah, I'd say the same. I mean, unfortunately, like there's a lot of people out there like selling sham products such as like you can buy your own 100-unit apartment complex with no experience. I mean, you could, but you probably, like it's just not going to happen in my opinion. right?
Yeah.
Like this is not a get rich quick game. To me, you got to build up your experience and not more importantly, you got to build up your own net worth. How else are you going to qualify for the debt? You're going to find some like unsophisticated rich guy to just sign his life away and sign on your note, you know?
Yeah,
It,
sponsors like that, I think they're not going to do something like that.
yeah. I mean, sure, like the people selling the 30, 40, $50,000 education programs are going to tell you you can do it all day long, but I don't sell that stuff. And I'm telling you the opposite, like,
Yeah, it takes the network and reputation and work.
yeah, I mean, and it takes capital, right? So part of that is, I guess my message is just work on yourself, buy little rental properties until you build the base, but get your net worth over 1 million at least.
Yeah, got it. All right, so in current goals and aspirations, what is there? What do you have for you?
Current goals, just keep doing the same. I think we're always trying to swim upstream. There's a lot of people buying apartment buildings, whether it's those little class C 50 units and then swimming upstream to the 200, 400 unit classes B. Um, you know, you don't see very many operators have been doing it for a decade or two, and that's because they further swim upstream to more institutional assets and developments, which is where we're kind of heading off into in the horizon,
Mm-hmm.
because it is a very, very crowded space where you know there are a lot of these education groups teaching people how to do this stuff, and whether they can or can't, they are.
Mm-hmm.
And that's kind of where we're like, man, like these guys are just pushing up the prices on these apartment buildings, and it's just a very too competitive market. I
Mm-hmm.
bet it's still better than amongst the masses buying under $1 million assets, single family homes, duplex, triplex, quads. But it's just you're always trying to move for the next thing, the next like less competition. The air is cleaner the higher you go on the mountain, as
Yeah,
they say.
that's great. So, what rich people problems do you solve?
Yeah, so for I guess from what I see from my clients, I mean a lot of them make over 300, $400,000 a year. A lot of it is not really making more. It's more about like taxes.
Mm-hmm.
Unfortunately, if you don't invest in, real estate deals or syndications that do cost segregations to get passive activity losses, or what we call PALs for short, because they're your pal,
Yeah.
funny, right? But if you don't have these PALs,
Yeah.
you are not able to start to execute some of these real estate professional status strategies and lower your adjusted gross income. And that kind of unlocks like this alternative tax game, right? Where most people are doing like whimsical things such as 401ks, pre-tax, post-tax, maybe a backdoor Roth. But like when
Mm-hmm.
you start to get into these other strategies that are kind of like more like playing chess than checkers, that's kind of opens up a whole new world. So you're saving a lot in taxes. You're also making more in terms of your investing. It's a very simple game, right? That I think high net worth people play. It's very simple. And that's kind of why, when I started to meet other accredited high net worth investors and started to realize the strategies that they do, one of it, which is get away from little rental properties that are unscalable and high liability. You I kind of realized like, wow, this is, it's something anybody can do, right? I bet, you need to have a net worth of 1 million greater just to kind of set that bare minimum bar. But, like I think I mean, this is kind of why I wrote the book, right? There's different rungs to this whole ascending the tower. There are things that you do in the beginning, and then, I kind of work with people taking them from $1 million net worth to 10 million, right?
Mm-hmm.
And there's a certain strategies and mindsets, of course, right? Too, ideas around debt and putting together your asset allocation mix according with primarily alternative investments.
Yeah. Yeah, I understand people can take a lot of the depreciation from these buildings that they invest in and take them as losses. And so it offsets some of their income, which allows them to grow exponentially more.
Right, right.
Yeah.
In the long run, you want your investments to grow, and they will.
And the
But
appreciation is one of them, one of real estate's many perks.
yeah, yeah. But I think you get involved in the syndication deals for, there's two kinds of appreciation. There's market appreciation, which is just dumb luck.
And
And
voice.
then there is force appreciation, where you
Yeah.
take your own fate in your own hands. And whether that's, you can do it, we do it a couple of ways. We can do construction, new flooring, new appliances, new paint job, etc.
Mhm.
Or it can be more management optimizations, like
Lowering
maybe
expenses.
yeah, lowering expenses. Maybe it's firing somebody and getting a better property manager or better synergies, or maybe it might mean, getting some water conservation faucets and head showers, the kind of there's a big suite of things. And that's what I like about real estate.
Changing the
This stuff,
toilet.
yeah, this is not rocket science, guys, right? And it's just a lot of it is based on demographics, and this is kind of why we focus on workforce housing. The richer, the population growth is getting bigger, and there's this growing demand, especially for this lower middle class.
Yeah.
Rob.
Yeah. So what would I need to learn in under to accomplish getting billions in asset under management? What?
Well, you would need to, I would say, get yourself to probably $1 million, couple $1 million net worth. And in doing so, you probably own a rental property or two or a few, right? At that point, a lot of it is luck, right? But I think a lot of people misinterpret luck with putting in the work. You have to do both.
Yeah.
But without luck, you know, you're just a passive investor at that point,
Hmm.
right? And luck means, having, dozens of investors who will put up 50, 100 grand alongside with you.
Hmm.
It's very hard to create traction like that. We were just kind of lucky in the beginning. We had a lot of good successful projects in the beginning. And that's
Hmm.
kind of what internally kind of just churned and grew the investment group for us. But,
Yeah.
For I would say 100 people that pay 50 grand to get the mentorship and the built-in network, only maybe one of those people are successful. So probably the better way of making money if you want to get rich is just to become a multifamily educator, a real estate educator at the end of the day, Because at the end of the day, it's not your fault. It's the student's fault. They
Yeah.
didn't put in the
Results are
work.
not typical, right?
Yeah,
The
yeah,
disclaimer.
yeah.
Yeah, that's great. So what skills are needed?
Project management skills. I I from what I see, like, or at least from myself and
Yeah.
other successful people, one thing that's common is they had at least a decade of experience in a Fortune 500 company in some management leadership role in some professional facet.
Hmm.
To get those roles, you typically need college educations. And this is coming from a guy who doesn't really think too much of college and academia, right?
Yeah.
But that having that capacity to kind of think abstractly or strategic is really what it takes to be an entrepreneur in the real estate world or any world. And maybe I've been thinking about this lately. I don't know what it is, but perhaps it's your ability to do the mundane things or the normal things, like, play around with a spreadsheet, manipulate numbers. You have the ability to do that with some ease.
Yeah.
So you can get that shit on the side and then really focus on the more important things, which is managing your staff, leading people.
Yeah.
Right. And I think that's where a lot of people who do step up to manager positions, they may or may not have the capacity to do that. They were just good worker bees, and they don't have that higher level capacity to operate in the second, third gear,
Hmm.
at that manager role to lead other people. But yeah, just no different than any other corporation or small company. It's You can do the thing on the ground, but you need to leverage yourself, and you're essentially becoming a leader of other people. Or you can find those people who have those personal skills, to kind of do it for you. Like, personally, I mean, I'm not the best at, coddling staff or with people. I understand it's very important though.
Hmm.
I empathize it, but I don't think I have the skill set for that. So
Hmm.
I hire the right people who do and can complement me, and I can kind of put myself in the right position.
Yeah.
So But maybe at the end of the day, it's just self-awareness a little bit. Some people, they think they're hot stuff, delusions of grandeur. That's, I guess you got to go through that, right? I mean, most guys who win the NBA championship have probably lost in the playoffs at one or a few times, right? First, unless you get your butt kicked, you don't have the tenacity to come back and work at your craft, to come
Yeah.
back.
Yeah. Tenacity, very
Yeah,
important.
yeah.
So management, you would say, in underwriting skills would be just knowing how to do the numbers and know how to manage people, because you can't be everywhere at the same time.
Yeah, I mean, you don't. I think a lot of people do come into this world having some ability to underwrite stuff. I mean, it's not the hardest thing in the world.
Yeah.
Um, doesn't take a rocket science to do it. But now you have to kind of, you know, ascertain and kind of evaluate risk, right?
Yeah.
Based on those numbers. And that's again an example of you have to have a capacity to synergize that initial work. But that doesn't mean that you can't hire somebody with experience from a private equity firm to do that for you. Like, I mean, how once we've grew past $1 billion of assets, we started to hire a lot of people who had that experience much more than us. So I mean, it's not like you can't do it, but
Yeah.
then again, you need money, right, to do that. It's not
It
cheap.
gets easier once you have
Yeah,
more money.
yeah, exactly. But and that's exactly what I was saying, right?
Yeah.
It's
You
hard to
get to a
start.
million and then
It's hard to start a fire without any like starting smoke,
firewood.
right?
Yeah.
Yeah,
You need 10
exactly.
pieces.
Yeah.
Got you.
But I don't know.
So,
I mean, is that good advice or is that
yeah,
crap? I
yeah.
mean, you
No,
tell me, right? Like, I don't
no, no.
know. I
I,
mean, I
I
want to
think it's
give
good.
people,
I think it's
I
good
want to,
advice.
you know,
It comes from your experience, knowing that you either have to be really good at managing, or you have to be able to put the right person who can manage the people for you. And as you grow, you hire more people to do more, to do more or better of the job that you're doing.
yeah, yeah. So maybe another tail onto that is, yeah, when you have an exit or a deal that you sell, don't be a dummy and just blow the money on something. You've got to put that money back into your business. I mean, I've been doing this probably 5, 6 full cycle things again and again, leapfrogging.
Yeah,
Um, but then again, if all your goal is to be a $1 million net worth guy, then so be it. But if
right.
you have the tenacity to kind of grow a culture, grow a business, and grow bigger, then you have to play the delayed gratification game multiple times.
Yeah, that's amazing. And so let's talk about some of the beliefs that are needed to be able to get to where you're at. We talked about some of the skills. What are some of the beliefs that might, for example, the might not help someone start, or might not help someone think they could do it, something like this.
Yeah, I mean, let's talk to most people out there, right, who may or may not have even started. I mean, just start to buy a rental property, right? Like play around with a little analyzer. I mean, we have one on our website for free, to evaluate income and expenses. Like, just do that. Just get freaking started, you
Yeah,
know. As much as I kind of say, and I think you agree, like it's not that hard to buy one rental property. But then again, sometimes I do lose sight of like it is a big step. Most people do not own a single rental property.
most people
Um,
think that their home is the best investment.
right,
So,
right.
and if they're going to spend money on a home or an investment property, and they spend money on a home, now they don't have money for an investment property, and it takes them a little bit longer.
Yeah, yeah. But then again, the goal is, if you had 10 properties paid off and they each brought you $1,000 in rents, sure, maybe half of that goes to expenses,
Hmm.
but that's a pretty comfortable retirement right there. And especially if you start to pay them down and snowball the debt to pay it down, it's not going to take you 30 years to do it. You probably do it in a fraction of that time. Um, it's I think that's what's nice about real estate. It's so powerful that you can not have a good strategy and buy prop single family homes and pay them down, which I don't really agree with, right? You want to be more optimizing in terms of the return on equity and your debt. But
Mhm.
even if you did that, you did pretty good. You know,
Yeah.
really no different than buying your house to live in and paying it off in 30 years. It's probably the worst strategy, but the damn thing works, like you'll be a millionaire, if you
Yeah.
bought by the
Yeah.
time you're 60, 70 doing that strategy.
Yeah, that's true. And what about some traits? What are some traits? I think you mentioned earlier tenacity. I think that's a trait. But some other traits that may help someone on the journey towards having a billions in AUM, for example.
Yeah. I mean, most of our clients are passive investors, right? They're not running around flipping houses, doing this burst strategy stuff.
Hmm.
It's not that they need tenacity. I think you need a tenacity to be like general partner and lead multi-million-dollar syndications. But to just
Yeah.
be a regular investor and to get to your goals in maybe a decade or less, I think all you need to just is like work a plan and be consistent and be realistic.
Hmm.
If you're able to save like 50 grand a year and you buy a rental property or go into a syndication just once a year, you stack that on top of each other in 5 years, you'll be amazed at where you're at.
Yeah. Yeah. I I I would agree with that. So this is something I believe. I don't believe that successful people are faster necessarily. Like we all walk at the same pace, more or less. I do believe that the people that are more successful do spend more time on the higher leverage stuff. Um, and so I wonder what is that high leverage and stuff and better use of my time.
Yeah, I would certainly agree with that. Um, in the beginning, you can be doing all sorts of stuff, right? Because your house is a mess, right? So it's easy. I think, once you become $1 million net worth investor and more, or certainly have more than a handful of rentals, that's when things get a little difficult because, what you're doing works, right?
Yeah.
You have some success, but based on where your goals are, right? Like some of my clients just want $10,000 of passive income a month, some want a little less. It,
Mhm.
I think you define your success your own way. Um, and I think at the end of the day, if you were to kind of, I mean, maybe this is a good exercise for everybody. Like, what is life is made and your entrepreneur journey is based off of binary decisions, yeses or nos. Do I do this? Do I not do this? If you can really slow down, like, and think, what is the next binary decision in front of me? Maybe something like silly, like going to the gym or not, right? Now,
Mhm.
those are smaller decisions, but try and identify the big decisions as you kind of alluded to, right? What are
Yeah.
the more leveraged ones? Like, should I put $30,000 and buy this $100,000 house in Atlanta, right?
Yeah.
Should I pay $50,000 to this guy to teach me how to do this? Is that a good use of your money?
Yeah.
Most times, no. But like those are the decisions that people make that put you down into the pachinko machine of life.
Yeah.
Um, but I think most people they get lost in the minutia, like you said, right? They're too busy wondering what's the next mindset self-help book, or like,
Or maybe
should I
they
do?
get stuck on the planning.
Yeah, should I do 6 sets of squats or four? Like I don't know. I mean, keep coming back to health and wellness, right? But which is important.
It's
You
important.
want to be in the right state and have the energy to do what you need to do. But, you know, I would say segregate your life in terms of finances and entrepreneurship if that's your end goal, and figure out
Yeah.
what are the really more high leverage points of that. But it's hard if you haven't gone down this road. That is where a mentor comes into play, I guess, or at least a coach that can see things for it really is, where I mean, I struggle with that too, right? Like, what the hell should I do today, right? If I'm coaching
Have you come up
myself.
with have you come up with some framework that may help you?
Yeah, I don't do this, but yeah, supposedly you're supposed to like what are my goals? What is like the things I could be doing today? What are like the top things that I really only have time for, and more importantly, energy for, that will lead me to these goals? And just freaking start with that and do that,
Mm. Yeah, it's
you
simple.
know? But I mean, I'm guilty as anybody, just running around with my head cut off doing all kinds of things, right? Because we kind of just fill up our calendars.
Yeah. All right. And so there's a couple questions about you and your organization. How do you run things?
Um, these days, I don't know if it applies to anybody out there, but we have staff and we have a pretty big payroll, and then I kind of use my times on the more high leverage things that only I can do, such as working business development, talking to some of the bigger lenders, players out there. And
Hmm.
I've delegated all the other stuff.
Hmm. Makes
And
sense.
maybe that's a constant battle, right? From the top to the bottom. That's maybe what everybody should be constantly doing.
Yeah.
Again, focusing 80-20 rule. What is it you should be doing?
Yeah. So you mentioned business development. That'd be like finding new acquisitions, finding investors, and talking to lenders.
Yeah, pretty much. Like the things that you need. I think real estate is one of those things you definitely need relationships that open doors for you. And that's what business development is basically, is like, utilizing something only I can do, which is to open up a certain door.
Yeah. Yeah. Makes sense. And how do you organize stuff? Is it s similar answer or?
What do you mean organize stuff? Like what's an example, I guess?
Well, I would say running things is more of like running on the business. Organized stuff is maybe some systems that you put in place or some processes.
Oh, I mean, I would say like, getting things done, I think is a great resource. I read that book maybe a decade ago. I mean, kind of just base it off that, but you create your own systems as you go along. I mean, I went to school as, industrial engineer, which is all about processes, SOPs, and that's
Hmm.
just how I think. So maybe I'm lucky that it's second nature to me. But yeah, you got to come up with your own style, right?
Yeah, yeah, for sure. And big question, how do you raise money? Or maybe how did you raise money when you um, started with your first apartment, Class C
Yeah,
building?
that's the hard part, right? Because now it's easy, right? We just send out an email, and yeah, that's kind of that's the lame answer you always hear, right, on
Yeah. It
podcasts. We send out an email, we got, that's
was like, well,
simple.
how'd you get the emails?
Yeah, yeah, yeah. That's what frustrates me when you get these fake gurus on. But yeah, in the beginning, it was super hard, and we kind of focused on like, well, I didn't get any family because all my family is broke, but like the friends, family, and fools
Yeah,
what they say, right? I mean, there's a lot of people that hang out that are kind of real estate, centric, or some people call them real estate groupies,
yeah,
and they don't have very much money, but they are willing to interact, and you can find those people and gain trust with them. Um, that I would say that would be kind of where we focused on in the beginning, because you're not going to get the good investors in the start. They
hmm,
hang back. Smart, sophisticated investors only invest with people that their other friends have invested with in the past.
yeah,
It's an unfortunate chicken and the egg thing for people getting started, but yeah, you just gotta get lucky. And I think the first deal we did, we needed to raise like $1 million,
hmm,
and like, man, was that a struggle? You know,
yeah,
that was a freaking struggle.
yeah,
But I knew like that was, if you can just get over that hump, you'll be off and rolling for the most part. Granted, you don't your first deal is not a blunder, then you're totally screwed, and you might as well just go back to your 7-Eleven and get a day job.
yeah,
But yeah, it's that's what I don't like about like all these like books, autobiography books, is
hmm,
because you look at like why would you're so like success bias or like the self-selecting survivors. I don't want to know what Steve Jobs did to get there. I want to know what the average dudes did to get, somewhat successful. I want to follow what they did instead of
Mm,
the one outlier. Like, if people have read the book Malcolm Gladwell Outliers,
yeah,
I don't want to know what that guy did. He was destined to start from the beginning. Like
yeah,
I don't want to follow Victor Wembanyama. I don't know how to pronounce his name too well, right? The
yeah,
7'6" lanky young first pick of the draft who is like can dribble like a guard.
yeah,
I want to know what like the Asian guy who's like 5'4" who made it to the NBA did,
yeah.
right? Like,
Like statistically, he wasn't supposed to make it,
yeah,
or like
yeah,
he was just average. Yeah,
yeah. I want to know what the guy who didn't have very much of a network and he maybe had some kind of stutter in his talk, not the smoothest person, and who didn't get lucky doing a podcast in 2016 like how I did. I just got lucky. That's
yeah,
part of it.
yeah,
Right now, like you can't really do a YouTube channel or podcast. This shit is overplayed. You can't
yeah,
do that. I don't know what it is. If I knew, I'd do it.
yeah.
Right? Like,
And so come in. And so, how do you raise capital now, or how did that progress? Like over time?
I mean, that's like any great American company, right? Like you have to get lucky in the beginning and get some kind of traction. Traction is the key word.
Yeah,
If not, you're just one of the other blowouts along the road.
yeah,
No fault to you. Not like you didn't try hard enough.
hmm,
It's no fault to you other than that you just didn't get lucky.
yeah,
And that's the sad part, I think.
yeah,
There's so many very like, hardworking people that just didn't get luck and didn't get traction.
yeah. I heard from a friend who has I think 850 units. He says that whenever you do email now an investor and you're starting out, they always say no, but then they watch what you do and they see if you have success. Then they invest with you. So it is funny in the sense that
Yeah, that's true. That's true. I mean, I have, probably every other month I have a guy who's like, yeah, I've been listening to your podcast since 2016. Because I always ask like, well, I'm only hearing from you now, and it's like, well,
right.
I wanted to watch you. But I will warn people, sometimes those are the not very good investors in the long run.
Hmm, I see. Okay. So let's see. How did you get your first deal? What was that first apartment C building? What would that look like?
Um, I can't remember. It was probably I know it was a class C because that was the crap we started with initially.
Yeah.
Because that's all we could afford. But
Tell me about the time when you remember the soonest when you were doing a deal when it was in the early days.
early days, I mean, I initially started to buy properties where I lived and they weren't special. I mean, the first one I was trying to live in it. It was like an A class property and it was in a good area,
Single family or apartment?
single family.
Yeah.
And that's just not what you do. It was in Seattle, Washington too, right? A primary market. Then the next couple of units I bought in a little rougher area part of Seattle. And
Yeah.
then I learned more about these secondary markets and started to buy in there.
Yeah.
Um,
What about the first apartment building or not kind of like the first apartment buildings? Tell me, you remember do you remember when you first started investing in apartment buildings in the early days?
yeah, yeah. What in particular about it? Like,
Just, how'd you find the deal? It
oh,
was
it's all through brokers. Yeah, we don't go after like garbage properties. That's why, like, that's part of our investment, like business plan is we're not the guys to go into like 80% occupied or less assets. So
yeah,
those properties are going to be controlled by brokers.
yeah,
I think there's a lot of people telling people that you can write yellow letters and it doesn't work. We get all these stupid yellow letters. We're never going to answer them. It's silly. It's a waste of your time if you're doing that.
Yeah.
if you're going after stabilized assets.
Yeah.
But if you're going after like distress assets, yeah, maybe you can find a stupid investor that owns an apartment. But typically, if you've gotten to that scale, you know that you go to a broker to put it out there and get the best pricing. We're not stupid homeowners that don't know how to read, that get scared, and we get tricked into somebody coming into our kitchen and basically swindling us to selling our property for 40 cents on the dollar.
Yeah.
Think about it, guys. Like
Yeah.
these assets are controlled by brokers,
Yeah.
right?
It's a more sophisticated group of people.
Yeah, and actually, like the brokers do their jobs. I think like their job is to go find sellers that have somewhat distress or situations where in the residential world as opposed to the commercial world, residential brokers just take pretty pictures of themselves and market themselves. That's all the game is. If you want to be a real estate agent, that's all it is. Just a marketing game,
Yeah.
right? Where the commercial brokers, the good ones at least, they're constantly scraping lists and calling lists and cold calling and interacting with the sellers. And when somebody needs to sell, they're top of mind and they get the listing.
Yeah. And so tell me, you were mentioning that you don't go after the crappy properties. What kind of properties do you go for?
Well, these days are a little bit different. In the beginning, we went after the Class C properties because that's all we could afford. Then we went more after Class B assets, but still, like you're dealing with tenants, and that's what we're trying to get away from.
Yeah.
Call us a little, prima donnas, but we've had like Class C assets. A lot of times they'll run with like 10-20% non-payers in there.
Yeah.
You think it's crazy that you have 10 people and only like one or two don't pay every month, but that's how it works in Class C world, and to some extent, that's what happens in Class B world. And what we've realized after a while is like, when you're buying these types of assets, you're always feeling the ups and downs of the economy, pandemics, eviction moratoriums, supply chain, and then high interest rates now and stagflation. The shit never ends. There's always something,
Yeah.
which is exactly why you realize why the professional institutions don't buy. They try and stay away from the stuff that we were trying to buy. Right. So
Yeah.
today, way we're trying to sum up Shima is we're just building stuff from scratch.
Got it. So you've actually gone away from buying, like let's say Class A or Class B, and started more developing. And you,
Yeah. Yeah. It's the ultimate value add at the end of the day, instead of just putting a little lipstick on the pig. And the the nice thing is that it's not many people can do it, right? They don't have the professional expertise to do it. And it's hard to get loans for multifamily because a lot of time, like to get Fannie Mae, Freddie Mac loans, you need to have a net worth liquidity greater than of the loan, and you have to have bought 100, 200 unit apartment complex in the past.
you have to have
That's hard.
100 or 200.
Yeah, you have to. I mean, it's a chicken and egg thing. The question is like, well, how the hell do I do that? Well, you have to join on a team to do that. But with the development stuff, you have the added I guess rung where you had to go through these projects, construction projects in the past.
Yeah.
So that's another barrier to entry, and that's what we like, you know.
Yeah. Yeah, that makes sense. And so do people still invest with you in a GPLP structure?
Yeah,
The development
we'll
deals?
normally do like like a 506 B or C offering is how
Mhm.
we typically structure the raise portion. But the way it normally works is, there's an asset, there's an LLC that owns said asset, and then we all own that company. Right?
Yeah. And so what structures do you use for development deals now?
Same thing, same exact premise.
Like 80% investors, 20% you, preferred return.
Well, normally there's like the capital stack looks like you got the bank loan, right? So that the majority of
Yeah.
the capital, and then LPs come in, and then the GPs at last, eat last.
Yeah. Okay. All right. And so yeah, um So you don't find these deals anymore. You make you. I mean, I'm sure you find the demographic areas that make sense, and that's a whole other
Yeah, yeah. I mean,
process.
nowadays it's just there's not very many like opportunities that make sense because the criteria is like we need 20 acres of like land too, right? That's not developed.
Yeah,
I'm not a huge fan of doing infill. Um, but yeah, like there's just not many, clean 20-acre plus parcels of land in Path of Progress these days.
yeah, yeah,
But you don't need to do that many of them to kind of make the same profits.
yeah. And so, tell me, where do you learn? Like, I'm sure you've, of course, learned a ton throughout your journey. Where do you learn this stuff, or how did you learn your stuff?
Um, I mean, I kind of learned from a lot of other investors, and a lot of it is kind of just doing it. Like in the beginning, I think a lot of these like things you learn on the internet is about underwriting, but nobody talks about operation, right?
Yeah,
That's the missing piece, and a lot of that is just quite frankly just doing it.
being in the weeds.
Yeah, I learned by doing, right? The 70-20-10 rule. 10% is academic. I guess that's what you pay education for. 20% is from other people like peers, and then the other 70% is get out there and do it.
Get out there and do it. Got it. Love
Yeah.
it.
Yeah. But
And
that's why I say hopefully it's your own money, right? When you first
of
mess it
course,
up.
you have to have skin in the game. I think we
Yeah.
everybody performs better when they have some skin in the game. Um, so tell me, how do your actions
Yeah.
have a
I gotta
good?
get rolling here actually.
Yeah, this is the last
Yeah.
question.
Okay. Okay.
Yeah,
All
so
right.
how do your actions have a good effect on the world?
I'm not gonna BS anybody and telling people that we do what we do to make better communities for our tenants or anything like that. I mean, some of the investors like that storyline, and I'm sure, yeah, that's part of what we do. But
Yeah,
yeah, for me, it's more about the investors that like. I mean, this was powerful stuff that brought me from my bleak outlook of looking at my engineering job for 40, 50 years. Um, kind of it was a game changer for myself, and it allows passive investors to come in and ride on those coattails without having to do with tenant termites, toilets, and legal liability on their own, right?
yeah,
That's what excites me, right? And how it kind of changes. I think you said it before, like how it changes like the the financial future of people, and maybe that it might even mean that one person, I mean, might not have need to work their job and they can stay at home with the family.
yeah, yeah. That's true. So Lane, where can people find you if they want to invest with you or learn from you, hear your podcast?
Yeah, they can check out my new book, The Wealth Elevator, and yeah, or you just Google The Wealth Elevator,
Mhm.
and they can check out the podcast too.
The podcast is Simple Passive Cash Flow.
Yeah, but we'll be rebranding it to The Wealth Elevator very short.
Okay, cool. Well, Lane, thank you so much for your time, and I'm so grateful that you came on and shared some value with the group and myself. So, hope to have you on some other time,
Yeah,
and wish you good luck in this weekend.
cool. Thanks, Julian. Thank you, man. Bye.
Take care.